Hello again, everybody. It's Michael with your supply and demand market report. This is going to be looking at the energy markets and metal markets. And I thought I'd add the agricultural commodities as well, so corn, sugar, wheat, that kind of stuff, because I understand that some of you also trade those, whether that's in the futures markets or using contracts for different. So we'll add those today. Again, as you know, this is for educational purposes. This is not a solicitation to do anything with your money. I'm not a financial advisor, so please bear that in mind. Let's get into it. So looking at crude from where we left off last week, crude is still sitting into this area of an imbalance that took out the imbalance to the left. I'm looking, just to orientate you, I'm looking at the weekly chart, which should be to the left of your screen. I hope you can see my cursor moving. So it took out supply, some of the supply up here. It hasn't managed to get, actually beyond the supply zone that is in control, which is that one. But it has come back into it and did take out that high, which was where the drop came from. So we're still watching it. It's come into, if we go and look a bit closer in on the daily chart here on the right, it's come into demand down in here. And it seems to be holding that. Actually, it's not seems. It is holding that level. But as I said to you all last week, it's really this level and beyond that I'm looking for it to take out for us to be certain that this is going to be the market turn. Right now, I don't think anyone really can look at this chart, looking at the weekly chart, and say that, this is anything but a market that's been in a downtrend. We're using supply and demand to try and see if we can observe and monitor the trend a bit earlier than other traders in the markets. We'll see how that works out. But for now, it's gone into a basing pattern where we now have demand holding below, and we've still got supply and highs, so these highs to take out. I'm aware that some traders will be looking at this level. It wouldn't meet our criteria to trade just because it hasn't gone ahead and created new lows and stayed there. It wouldn't be the kind of trade we would take because it's effectively trading in the middle for us, so that wouldn't be a target. Okay, so that's crude. It's still on the watch list. It's still something we're monitoring, hoping that we see some sort of basing out, particularly on that weekly chart, looking at it trying to turn. It may not, but what we're seeing here is a market that has stalled for now. If this level does work, it confirms a lot more weakness. I'm not particularly interested in that level for the reasons I just gave, but I'm aware I'm very wrong often, so it might not work. Okay. And let's go to natural gas. Again, nothing much has changed in natural gas. We were talking about this level and how it wasn't a great level to trade from last week, and prices have just traded through it. Again, a market that is trying to bottom out after a huge downtrend. We still have these highs, as you can see, marked out on the weekly and also visible on the daily, that we need to take out. But for now, what has happened so far anyway is we've stopped going down. We haven't started going up yet, and that's yet to happen. If this continues to go down, it could be just a part of a continued attempt to get a grip on this downtrend. Let me get my arrow tool. So this downtrend is now basically gone flat over here. And even if it, dribbles down here, as long as it doesn't start forming huge downward candles and going further down, if it dribbles down here and regains that level and starts moving in and around here, it might all still be part of the bottoming process. So how it behaves when it goes below these lows here is going to be what determines, I think, the next move in this market, whether it traps people down here who are thinking it's going to continue the downtrend after a period of pause, or it's going to just have huge downward candles and continue the downtrend. But for now, for the way that I trade, there aren't really any clear setups, so I'm just monitoring it and watching it. Okay. All right, we'll go to the metals now, and we'll start with gold. So gold had a bit of a nothing week, not too much in the way of actual movement. It stayed mostly within the range of last week, and it's still undecided as to what it wants to do. If you look at it on the daily, it looks like it's trying to make some sort of a topping pattern with these highs in there and it breaking through these lows over here. So you've got highs that are going higher and now they're beginning to fall, as we go. So sort of cresting over here, trying to pull back into the areas that we talked about last week, starting with this one, which, as I explained in the previous video, if you haven't seen it, please go and watch it. But ultimately coming down here right now, what again has happened in gold is we've ended the up move. We've started to come down, but it's not set in yet, because on the weekly, what we don't have yet is a lower high just yet. What we have is a high that's been set, and we've had the pull down that's taken out these lows. We haven't set that new high yet, and there will be traders who will be looking to short it, aiming and looking at that supply level in gold to try to catch the counter trend move down. That's one way of using supply and demand to try and get into trades. It's not the way that I trade personally, but I used to take both sides of the trade, as I call it. But I tend to focus more on bigger moves now, just because of my own style of trading evolving as life gets busier, and I don't have as much time as I used to be in front of the charts. So there is a potential, if you're brave enough and you do two-sided trading, to try and get short somewhere up into this area to go down. Again, it's not a recommendation to do anything. I'm just speaking to the mic and talking about potential trade ideas, not for anyone to go and put their hard-earned money at risk. Okay, so that's for gold. Looking at silver, and this video is going to be longer than 10 minutes. I can tell. I think we're already 8 minutes, and we've still got most of the metals and the agricultural commodities to go. So silver is holding in the area that we discussed last week. It's trying to get some sort of trend going. It still needs, I believe this high is still in place. What's that high? 24.018, 24.02. So it's taken out that high. So now we potentially have I potentially have a trade over here. Looking at that, it's not the greatest level. In fact, looking at it now, it's something that I'm unlikely to take my full position size in, but it is still a trade idea that I will be monitoring. For all sorts of reasons, I wouldn't put a full size onto this, no way. But I would definitely put some size onto it, just because it's beginning to show that pattern that I like to see, where buyers have ended the down move and they are beginning to try to take this market to the upside. It's just not strong enough yet for me. You can see the scores here. They're not. The move away is okay. The initial move is okay, but the subsequent moves are not strong enough. Not as strong as I would like to see, I should say. Okay, so potential idea. Looking at copper, still in a downtrend. not doing much, didn't do much this week, stayed within the range of the previous week, still closed within that range. And we've still got prices up here to get to. It's not the greatest of levels. This is it on the weekly. It's not something that I'm looking to trade. We discussed this in depth at last weekend's roundtable meeting on Sunday, and I gave my reasons to the guys as to why, yes, it's on the radar, but it's not something that I would be trading, because the move away is just not strong enough. The candle score is really not high enough for me to take a trade at that level, even though it may work. It just doesn't fit my criteria. Okay. Didn't look at this last week, so this is Palladium. Looking at it here, very choppy right now, as you can see it. As we blow it up on the daily, it's really a trader's market, selling high, and trying to buy low. That's really what's going on in this market. So if someone put a gun to your head and said you had to take a trade in Palladium right now based on where prices are, it would probably be a long trade, or looking for a long trade, I should say, trying to get back into the highs up here. But right now, overall, it's, as you can see, not been doing well. Even it's so weak that even zones that are not very good are still holding. So that speaks to the weakness that is in this market. But it is trying to base through. It is trying to base through this. So we'll see what happens there. Okay, nothing to do right now. See if there's anything below. Right, it's reacting to that demand level there. So it's caught between those two levels. Until it comes out of that range, there's no point looking lower or higher. Okay, it's trying to base between those two levels. Okay, so let's look. Last metal is platinum. Okay, so platinum again is in some demand, not the greatest level, not a level that I would trade, but it is demand nonetheless. In fact, probably best to put it there. So that's what we've got in that one. It's reacting off of previously tested supply up here, which has worked before, but even though it created some supply, when it fell away, the demand has come in and gone to new highs. So it's a market that's fighting both sides of it. The sellers are trying to take over and the buyers are saying, So it's very, very difficult to hold a trade in this market, is what that tells me. So the institutions are having some trades, whether long or short, but nobody's holding on to any trades long term. And when you look at it on the daily, it's creating supply after supply. So this move down has been quite, the dramatic move. We now need, if we're going to go long, if you are, I'm not, but if one is going to go long, probably best to get above that level before starting to look for demand to buy at. Those would be my thoughts on it. Moving swiftly on to corn. So corn is coming up. I didn't talk about it here. These must be from another lesson, maybe one of the one-to-ones. But I was talking about this drop-based drop demand and how there was an immediate return. And I believe I did a video on how it's probably not a good idea to be taking this short because of the market's unwillingness to accept that imbalance, given that it immediately returned once it fell out of that area, even though it broke to new lows. That was one of the criteria met. The others were not met, and it immediately returned. So this effectively becomes a trap for any bears who were selling below that low, thinking this was the resumption of the downtrend that had been in place. They've been caught. Any one of them who had their stops now above these highs Some of them are already in pain because their stops would have been triggered. If your stops are higher, maybe you're still safe, but it wasn't a short that met our criteria. So the idea is not to just get into every trade, but it's rule number one, which is, as we know, don't lose money. It's not the same as don't have any losing trades. Is don't lose money, which is, your losses are calculated, they're assessed, they're within your set parameters. That's not losing money. That's part of the cost of business in the game that we're in. So that's corn for now. We've got supply above. The demand level below on the weekly is still around there, which hasn't been hit yet. So it may be that we go up first to supply and then come down. It may be that we blow through this supply, because who knows? But looking at it, the trend that is trying to emerge on the daily with this significant rejection of new lows and the trapping of sellers down here, there's a good chance we're going to be going up into that supply level there, which would be an interesting area to consider taking a short, whether it's set and forget, which is not really my thing anymore, but maybe looking at how price behaves when it gets up there. And looking at soybeans, again, a market that is, I think it's reached this level. Yes, it's reacting off of demand. It's got supply up there, which is decent supply. It's obviously in a downtrend, so we're going to be looking up into these areas. Now, this is going to be tricky. This area is sitting just above, or just below, I should say, the area that I would be interested in it. So it's not quite a level on top of level type of scenario, because the distance between them is too significant. But I would prefer to buy, or to sell rather, at this higher level than here. So for those of you who are interested in the counter trend move, which is probably not, it's not the way that I trade anymore, but I know some of you do. Some of you email me about it, and we talk about it. So that will be a level to consider right now. It's early, but it's a strong move. It's taken out sellers all through here. It's gone to new highs. I would have preferred for it to be, a strong close above those highs, but it did close above this one, which is why I'm even considering it at all. So that level there is one to consider for the counter trend long. Let's look below and see. Yeah, there is still some demand in here, but for now what the market is showing is this level may be one of interest on a pullback for the counter trend to carry it to supply, where a bigger position should be considered. Looking at sugar, the runaway market in the commodities, so far as everyone can see, sugar has been in, just drawing a random trend line, sugar has been in a strong uptrend. It's been in a strong uptrend, and it's accelerated to the upside. So it's now coming down. This is the idea. I'll give you guys a little tip, my way of looking at things. So all of this drop here is, you'll see it represented on the daily chart. That's what it is. This is still going down. The supply and demand trader who is wanting to take a long trade and saying it's coming into this demand level is not wrong. But what is happening on the daily chart is you're still in that downtrend. So setting an order in here to buy in an area where it's very, very ugly in here, it was a messy, big battle type of area. It's tough. I mean, we often are able to do it using supply and demand because it's so good in market timing. But it can be challenging, and whether you can build a long-term trading business trying to pick the bottoms in these downtrends is up for debate. Now, watching it as it comes in to see what it does, if it starts to come in, for example, and starts removing levels, and then you start buying pullbacks, is probably a safer and more sustainable business, because you are having evidence of buyers beginning to take control at a level that you expected it to happen at. Yes, you won't pick the bottom, so you won't get any smelly fingers, but you will still be able to get into a trade and psychologically be able to hold on to that trade for longer. Yeah. Okay. Wheat. Wheat has been the weakest sister in the agricultural sector, as you can see. Very strong downtrend. Hasn't had the biggest of moves in terms of ranges, but it has consistently gone down. They're trying to get a grip now with 1 week of, a rejection of lower prices, as you can see with the size of that wick, and you can see that rally here on the daily. I believe that's similar to what we just saw in, was it soybeans? Yeah, it was soybeans. Similar sort of rejection candle. The difference is that unlike soybeans, which has gone above its own highs, wheat hasn't managed to do that. So again, if you were going to use relative strength and pick one of those two to trade in terms of trading a counter trend move, which again is not something that I do, but other people do it, and that's fine, it wouldn't be wheat that you would pick because it's weaker than soybeans. Another tip for you there. Relative strength analysis 101. Okay? We do it in Forex. You should do it in every market you trade, whether you're trading stocks, futures, Forex, commodities. Yeah? Now, indices will be for the next video. We won't talk about those now. I think that's the end of this then. So we've done the metals, we've done energy, and we've done commodities. I'll do another video on the indices next. Thank you for watching. Please subscribe, share, and like the videos. Comment on any other markets you want us to include in this complex of energy or metals or agricultural commodities. And thank you for watching. Have a good week ahead.